Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Pulse for Friday, February 25th, 2022. Hope you're all having a great week. A lot going on in the world, lots to discuss. We want to come back and update you on our findings in this market, how we see the market working through all the geopolitical tensions that we're seeing, and more importantly, where do we go from here, right? So we're really starting to get somewhere in terms of moving away from this bottom, getting out of this correction, and starting the move higher yet again. When we last updated you on Monday, President's Day, markets were closed, right? And we talked about a couple key things that we were watching in the markets from a price level perspective, as well as the tensions that were building in Europe, in Russia, Ukraine, and how that might have an impact on the market. So fast forward a couple days, right? Late Wednesday night, Vladimir Putin declares war. They're going into Ukraine, right? The invasion is on. So naturally, investors the world over, started to grapple with the fact that this is a major problem for financial markets, right? And we're all doomed. That's it. We should just pack it up and head home. Stocks are going to zero. It's all over, right? Well, actually wrong. When we saw yesterday, markets open lower, and then a very large and broad-based rally unfolded. And I know many people out there are scratching their heads saying, how in the heck does the market go up when a war has actually been commenced, right? And what we want to talk to you about is that exactly today, and the market is a mechanism that discounts the probability of future activities happening, right? So the market does not get caught by surprise much oftentimes, right? And in this case, the market has been pricing in the probability of a conflict between Russia and Ukraine for weeks. So I know it's a big surprise for investors, but when the actual conflict happens, or begins, I should say, it tends to be a relief point for the market because we've already been preparing for this moment. And I want to share a chart with you. Let me just move myself out of the way here. And this is a chart that we call by the invasion, okay? By the invasion. This is previous conflicts where there was actual on-the-ground troop invasions that took place. The Vietnam War, Gulf War, Afghanistan, Iraq, and the Crimean crisis from 2014. And when you look at history, history tells us that that tends to be a turning point for the market, right? It tends to be a turning point because a lot of times markets are selling the rumor and then buying the news. And when the news is found to be not as bad as what has already been baked into the market, this is how powerful rallies can begin. So let's take a look at yesterday. Let's take a look at the markets in general. We just reframe here. Okay, great. So when we talked on Monday, we talked about how the market was going through a textbook bottoming and retest pattern. Okay, when we talked about that, we felt we had a capitulation low on January 24th. Let me just get my shapes here. So we felt that we had a capitulation low on January 24th. Then from that point forward, we had somewhat of a relief bounce, right? And then what happened? Markets started to roll over. Everybody started clutching on to the edge of their seats and saying, oh no, here we go again. And it's very normal for markets, let me just clean this up a little bit. It's very normal for markets to retest certain levels, right? Now, let me just make this bigger so we can all see it. Okay, what markets tend to do is they retest levels. And the reason that they retest levels is because markets can be very cruel from time to time. And let me explain what I mean. When we had this initial move down and a sharp bounce off this on big buying volume, right, a lot of investors, short-termers that is, look at this as a bottom. And they put new investments on, they put new trades on, and they use this as their line in the sand at the place or the point that they will exit if markets start to roll over again. Okay, markets know this. So what happens? We get the classic retest, right? Looking for a double bottom. And as I suggested on Monday, we made a move below this. Not by much, but enough to trigger a lot of automatic sell orders from all these investors that use this line in the sand as their place to give up and get out. So what that looks like, what we had happen, right, is a scenario where the markets on, Wednesday closed here, right? They opened sharply lower Thursday, and we get a fierce rally. And not just any rally, folks. This is one of the largest intraday rallies really in the last 2 decades, right? There's only been 3 occurrences in the last 20 years where we've seen markets open lower by 3.5% and then finish higher by 3.5%, right? So we're talking a 7% intraday spread. This is massive, and it's very important to note. So this is classic capitulation, right? Capitulation is a selling climax. It's when investors say, I can't take it anymore, get me the heck out of here. And this is what that tends to look like. And at the very same time that many investors give up, buyers reemerge, and it is off to the races. So at this point now, we have, let me just zoom out, we have embarked on what we would call a successful retest of the January 24th bottom. We broke a little bit below it, but we did not close below it, and that's key. A lot of the stuff that we look at is on a closing basis. So it's okay for us to move down on an intraday basis, but not on a closing basis. And I think what this really does here is it sets the tone for the next couple days and weeks, right? Because again, look at markets today. We're up higher again today after another lower open. So I think what you're seeing is a lot of dip buyers who maybe missed it yesterday are saying, not again, I'm not missing it a second time. And we're starting to see buyers return to this market. So again, we still have work to do to get back to those all-time highs, which are obviously up here, right? And we fully believe that this will happen in 2022. We don't think this is going to be some long, drawn-out, multi-year recovery. And the reason for that is, like we talk about markets and how they price in the probability and they build in or they bake in expectations on the future. Well, now we're looking at a scenario where the market priced in a war and it priced in probably 6 or 7 interest rate hikes. And now, what do you know? Just like we had told you, we're starting to hear rumblings from the Federal Reserve that, wait a second, I don't think we can raise rates as fast as and furiously as we thought because there's a war going on, right? So now all of a sudden, we're starting to get news reports that are signaling that, you know what, hey, Fed officials are saying, we got to take this nice and easy. We're not going to raise by 50 basis points in March. Remember, 3 weeks ago, we were told that was an absolute certainty by the financial news media that the Fed was going to do at least a 0.5% increase in March and maybe multiple in a row. So they've come out, they've thrown cold water on that notion. Now we're hearing that they'll probably do a 25 basis point or a 0.25% interest rate hike in March, and then they're going to reassess their path from there. So what we think this does is it sets the way or clears the way, for this market to bottom successfully and start to come to grips with the fact that they've priced in too many interest rate hikes and they've priced in a level of geopolitical conflict that the market probably has overshot. Okay, so again, we are not foreign policy experts. I never told anybody that the invasion was not going to happen. What I told you that I didn't think it would be meaningful, right? And when I say meaningful, let me clarify. Folks, this is certainly a humanitarian crisis, but this is not a financial crisis, okay? And I'll give you some numbers to back that up. Okay, the GDP of Ukraine, right? Their total output in a calendar year, 12 months, is 180 billion, okay? For comparison purposes, Walmart sells that much in products in 3 weeks, okay? So again, we feel for the people of Ukraine, but this is not a financial crisis. Furthermore, Russia is not an economic superpower, okay? I know the media talks about Russia like they're 10 feet tall, all right, and they might have some pretty good military capabilities, but they are not an economic superpower. And here's an example of that. Russia's stock market yesterday, one day, fell by 58%, okay? So more than cut in half in a single day. So as an aside, that's a clear sign that the Russian market is worried about the sanctions being put upon them. But that 58% decline caused losses in Russia of about $20 billion of market cap, okay? If we had the same 58% decline here in the United States, that would be losses in excess of $30 trillion, okay? So Russia is not even our little brother in the global economy. They're more like a distant cousin, okay? So the impact of this, humanitarian, absolutely. But is this a financial crisis? Not even close. Now, people will say, but Mike, energy prices, right? A lot of the West, Europe, they get energy from Russia. Energy prices are going to climb. And you're right about that. They likely will. But the stock market can deal with that. You know, if you remember back in, I believe it was 2014, 2015, around the similar types of circumstances we're seeing now, we saw oil and gas at the pump over $5 a gallon, $4.50, $5, $5.25. Okay, That's not fun for consumers, right? It puts a little pinch in people's pockets and wallets, but the global stock market continued to move higher. So, you know what? Unless you're an investor in the Russian stock market, I don't believe you should be worried about these events that as they unfold. And certainly, we want to see a quick, speedy, and peaceful resolution to these problems. But again, we have to separate ourselves from humanitarian crisis and ask ourselves, is this a financial crisis? And it is certainly not. Nothing we own is any less of a quality company today than yesterday or the day before based upon the action that is occurring over there. So a lot shorter with the video today. We know we went on for about 25 minutes on Monday, but we wanted to make sure we come back, give you an update on this. We're seeing the type of activity that we want to see from this market. And you've heard me say many times, when a bottom occurs in the market, it always looks very similar. It's a sharp down move in the morning, followed by a strong intraday rally and a close in the afternoon at or near the highs of the day. And we got exactly that yesterday, folks. Just a beautiful rally unfolding. Again, one day doesn't make a trend, but one day can start a trend. We do think that's what we're seeing. So, in summary, keep calm and invest on. This is a humanitarian crisis, not a financial crisis, and we're here to invest based upon the probabilities of financial success for the companies we own. We think none of that has changed. So if you have any questions, please reach out to us. Always here to talk to you about the things that matter with your money. We'll be monitoring the news flow over the weekend to see any developments as they come in, and we'll be back with you on Monday to update you on our findings. Have a great weekend, and we will see you then.